So the first thing I want to talk about is liability. And that's usually the first thing that comes up on a declarations page for your auto insurance. The liability is going to be typically there's two ways you can have liability. You can have a single limit or you can have a split limit. A single limit is going to be your bodily injury and your property damage are all bundled up into one coverage amount. So you might have a single limit of 100,000, 300,000, or 500,000. That means that if you're at fault, the liability to the other person or the property for the whole accident is one amount. So 100,000, 300,000, 500,000. A split limit is going to be where they're going to have an amount per person. So just using, for an example, 100,000 per person, 300,000 per accident, and 100,000 for property damage. And the way that would look on your declarations page is 100, 300, 100. So it's per person, per accident, and then per property damage for the whole accident. So the split limits oftentimes can give you a little bit more coverage in the totality, but it might give you less coverage for one individual part of the claim. So there's pros and cons to both a split limit and a single limit. The thing that you want to think about, and I've talked about this in prior episodes, liability, I think, is the most important part of your auto insurance because it protects you from being sued if you are at fault in an accident. So I recommend people to do an asset analysis, like look at what you could be sued for. If you're at fault in the accident, you could be sued for your assets. And the lawyers for the other person are going to look at your assets, and they're going to look at the amount of insurance that you have that the insurance company is offering to settle the claim. And if there's a big difference between those, they're going to more likely sue you. If they're similar, then they're more likely to settle with the insurance company because they don't have to go to court and go through the whole process of suing you and taking your assets. So you want to look at things like equity in your home, investments, and then 2.5 times your income. And whatever those add up to, that's your assets that you need to protect. And that's what the liability limit should match. And so if it's a single limit, you could use that total amount as your single limit. If it's a split limit, I try to be close on your per person to your asset level, because you want to make sure that if one person is, you T-boned a doctor on his way to work and he can't work anymore, you want to make sure that you can take care of that liability.